Sunday the 30th of June 2019. Obviously been a pretty good couple of weeks for the gold price, breaking through that resistance level about 1350 to 1370, depending on where your different technical analyst. But in my opinion, it's been a pretty, you can't sort of question this as a breakout. It looks like a breakout, and I tend to trade it as such. So I don't think this is a false move or anything. I think it is a genuine move. And it looks, that's been a key level for 5 years. So that's a pretty important move, and that's obviously what's got a few people talking. Um, I was looking at the chart. I've sort of heard a few people talk about key levels above. It's not something I'd really looked at until now. One level I'd heard about is this sort of 1480, and as you can see there, that was kind of on the immediate. If you're following the gold market when there was this massive sell down in 2013, did have a bit of a bounce back after that, and that's, I guess, where that 1480 level comes in. So that's the first kind of target from here, and then after that you've got the initial breakdown level, which was this breakdown of this sort of 2-year topping pattern, and that broke out about 1550, 1540-ish. So that's, I guess, the next couple of levels to look out for. So in the short term, that 1480, or the short to medium term, the next few months, I think that 1480 is kind of the target, and it's looking pretty positive, the price action in the last week or two, the last couple of days. After that initial surge, it's still maintained above 1400. You can see there a little bit of, whenever it was tried on the last couple of days of the week, they did try and push it back down below that 1400 level, and it's found support there quite well. You can see there the Wix tail, the tail's coming in there at 1400 and bouncing it back up. So it's sort of, it's holding pretty well there, and that's pretty positive price action. The last time really we've seen such a surge in the gold price, where you've seen that sort of 3 or 4 days of almost $70, $80 there, or maybe a bit more, almost $100 move in a week anyway, was in 2016, at the start of 2016. And if you remember, at the time, there was a lot of discussion about negative interest rates. And in the last video, I talked about, the long-term driver of the gold price is usually negative real yield. So gold will do well if inflation is, relatively strong, and interest rates are low. And at the moment, the inflation is okay. It's not really backing off too much. It's not sky high, but there is a base level of inflation in the US, but the interest rates are really falling on the 10-year bond. And I saw this chart come about this week a few times on Twitter, and it's talking about negative yielding debt worldwide. And you can see here that obviously there's been a bit of a surge in the last, so in the gold price there, and in the last sort of 6 months, you've seen the amount of debt really come up another 2 trillion or $2 or $3 trillion there of negative yielding debt. And it's not coincidence that the last time there was that sort of move in the gold price, which was February 2016, which is here, was the last time there was a surge in negative yielding debt. So I tend to think, and that was followed obviously by another good run in the next 6 months after that. So unless you see things turning around here for the global economy, and I see it getting worse. I think this trend is likely to continue. So I'm looking for this to sort of consolidate here, and clearly you can see here that was that last time there was that underlying buying pressure at that 1200 level, that it bounced around a bit. I think it's unlikely to bounce around for another 6 months here. I think there's a good chance of a bit of a surge higher again, particularly if sort of world economic indicators start struggling further. But that's a pretty straightforward way of looking at it. But it's pretty obvious that the gold does well in an environment with negative real yields, and everyone knows that sort of intuitively. But this chart sort of shows it pretty well. So that was kind of the main thing I wanted to look at. And the other, the Australian dollar gold price has obviously surged, extremely well, above $2,000 for the first time. Topped out at about 2070, I think. I've still got this upper trend line here of about 2150 to 2170 sort of area if it happened in the next month or two. I think that's still a pretty realistic target in the short term. You've seen it often has tested that upper line. It's wanted to get there. So I think maybe there's an opportunity. We've got interest rate decision in Australia this week. I'm not sure what the odds of a cut there are. They might hold off again, or they might do another 0.25%. I think there's probably a reasonable chance of another quarter. I don't think they're going to go more than that. If they went 0.5%, that would, I think, spook the market and really probably crush the Australian dollar. But I don't think the Reserve Bank wants to do that. So it's either probably a hold or a quarter point cut. But I think the market's factoring in two cuts by the end of the year, so they might hold off for this meeting and then see how that last cut helped. This is how they view it. They want to see how that last cut helped stimulate the economy and stuff. But I don't actually believe that it's no longer doing that. And the conversations I have with people who are probably not really financial types, as they're starting to realize that how much lower can this go? This is getting ridiculous. And they don't view it as stimulative for their own lives and start to sort of question. There's a confidence limit where people start to get worried, and when you're looking at rates of 1.25%, I think that's even a lot of the general public can kind of work out that something's not quite right if you're getting interest rates at 1.25% or 1% or less. So that's something that's I think the Reserve Bank's kind of forgetting here when they just sort of pushing on a string as their only interest rates are their only lever in the economy. So obviously that the Australian dollar gold price is a derivative of the US dollar gold price and the currency. So the Australian dollar's kind of rallied a little bit in the last 2 weeks. It's had that sort of from the bottom around 68.5. It's gone up another cent and a half. It's underperformed the Australian dollar gold price definitely. US dollar's weakening against, the US dollar index has weakened reasonably in the last couple of weeks, and that's what's pushing the Australian dollar higher, but it definitely by no means surging. It's back up to that sort of 70 level, which could be a little bit of an important, you could argue this is sort of starting to potentially form a double bottom here. It was sort of at this sharp move down to that 68.5, and then we've had this longer, I think I've talked about a charting book that I've read by Thomas Bukowski. He calls this a sort of an Adam and Eve double bottom, sort of sharp down and then a little bit of a longer bottom on the second. So that potentially you could argue that, but I look at these things from the fundamentals and from the chart as well, and I think the fundamentals of the Australian economy are not good, and that's gradually going to get borne out in the economic data, and I think that's going to do. The Australian dollar is going to underperform, which is why I still favour that Australian dollar gold price to move higher. So I won't look at some of the chart. I'll have a look at briefly actually the S&P 500 back up at all-time highs. Doesn't seem to be a lot of impetus to move higher, but all this rate cutting, it can still move higher here. Technically, if it breaks out above that, the highs, people start saying it can keep moving to. I think I've heard some targets, 33, 3,500. Who knows what it can do, but I think people are gradually starting to sort of question whether there's much legs in some of these stock markets and how much more interest rates can be cut to stimulate markets, and if that can actually push them higher anyway. So, everyone's, even a lot of people who were bullish gold still think the US market can move higher. I think there's a scenario here where the gold price can keep moving up, but the currency, the S&P 500 starts to turn down just on general economic weakness. So that's sort of still my base case, but I'm not in this trade, but I follow it because generally gold will move inversely to the stock market, generally, except in an environment of extremely low interest rates and money printing, which is kind of where we're sort of moving. So it can, in 2009, 2010, gold did extremely well, but so did the stock market. So maybe we're moving into that sort of environment again where both can move in tandem. But who knows? So, it's been a really definitive sort of couple of weeks for gold. It's starting to get a bit of interest. I think the one thing I liked was that, even even that was such a good surge, just wasn't getting mentioned too much this move. I think the mainstream um, sort of still not very interested in gold, which is kind of what you want. You kind of want that to be a stealth move. It's not a stealth, it's still getting a little bit of airplay on the news and stuff, but not. It's not no, it's not a bubble or anything. There's not many people interested here still, and I think there's still a good chance of a move higher in the next few weeks. And it's going to take a little bit of time for some of the stocks to start moving. I think, particularly at the lower end, and that probably needs the gold price to go up again a little bit further to get more sort of speculative juices going in the market. So all in all, I think it's been a pretty definitive couple of weeks, and I think it's definitely the time to really have a look at the gold stocks and think of the best ways to play this and get position, which is what I've been talking about in these videos probably for the last 6 months. That it looked like there was real positive signs here, the most positive macro backdrop for the gold market in the last 5 years, and it's no coincidence that we've broken out above that 5-year trading range just as economic conditions start to weaken. And that's what I'm trying to do here, is sort of marry up the fundamentals and the technical action. And it's not they usually do marry up pretty well. So yeah, that's update, and I'll do some videos on the gold stocks and how they've performed with this move in gold as well.